Hello and welcome to Business Insider with Mario Toneguzzi on YYC Business, brought to you by MegaPixx Media. Joining me today is Greg Kwong, who is Executive Vice President and Regional Managing Director for CBRE. Thanks, Greg, for joining us today.
Good morning, Mario.
Well, looks like you guys are first out of the gate with Q3 numbers in the commercial real estate market in Calgary. We're going to talk a little bit about those numbers and a couple of categories. And let's start with the downtown office market, which is always something that everybody's always interested in knowing about. Vacancy is up to 32.9%. I see 6 consecutive quarters of negative absorption. And what I find interesting is 2.5 million square feet of office space in that period of time have been returned to the market. So what's happening with that downtown office space these days, and why?
I think we're seeing more of the same from the basically the major user group, which is the energy sector. We really haven't seen a lot of hiring, therefore demand for more office space from that group. Although just the last 4, 5, 6 months, the cash flows, if you look at a lot of their balance sheets and a lot of the publicly traded companies anyway, that cash flows is quite good for them right now, but they're just not resulting in hiring booms and things that we need to get our office market back on track.
And there doesn't seem to be any light at the end of the tunnel in many ways, I guess.
Well, I guess anytime you're at this high vacancy rate, it looks pretty dire. But I do know that, certainly in the last 4 recessions, basically, that Calgary's gone through, we've always bounced back. So if you believe in Calgarians and believe in diversifying away from the energy business, which is what we're doing, and all the other things that we're trying to do to get our economy back on track, there will be brighter days ahead. But you're right, it's a deep hole we're in right now.
One of the positives, if you want to look at it from that perspective, is the flight to quality. What is the vacancy rate right now for the sort of the Class A buildings downtown?
Yeah, this Class A buildings is less than 10%. So if you own 8th Avenue Place, Bankers Hall, Devon Tower, things like that, you're generally doing a lot better than, say, some of the C class and D class buildings, which they're breaching 40-45% vacancy rate.
So why is that happening? Why are people moving to those better class quality buildings?
Well, you mentioned it earlier about the flight to quality. If you're going to be paying, a company 5 years ago paying in a C class building $20 to $25 a square foot, can now move to a double A building for the same price. They're starting to look at that, saying, well, value for dollar, I'm better to be in a double A building.
Yeah,
it's pretty straightforward. So
when you look at that between sort of the core and sort of the west end of the downtown must be pretty decimated in terms of office space.
Yeah, pretty well. Anything west of, say, 7th Street, if there's a higher than a normal vacancy rate there relative to the rest of the market. Then if you gravitate more to the kind of 7th Avenue and 2nd Street and 3rd Street, where a lot of the A-class buildings are, you do have a lower vacancy rate, but still, it's all high in general. They all work together, right?
Yeah, exactly. Let's talk a little bit more positive, looking at the industrial market. The availability rate is 5.6% right now in the market. In that quarter, a positive absorption of 1.5 million square feet, the highest since 2006, and 5.5 million square feet of space taken up so far this year. Why is that industrial market doing so well?
It's just more of the same that we've seen in the last 5 years, where the e-commerce business has really resulted in demand for warehouse or distribution space. And we've touched on before in previous discussions that we've had that Calgary is just centrally located in the western side of the country, that they can get products, like Amazon can get a product to pretty well anywhere in Western Canada within 24 hours, 48 hours.
Yeah.
by being in Calgary. So and the COVID situation, the shop from home phenomena is here to stay, and we're just reaping the rewards from that. All these companies setting up shop here.
And there's no hesitancy, I guess, for people and companies and developers to build, I guess, with that demand out there.
Yeah, no, absolutely. In fact, we're seeing a lot of spec industrial buildings going up, ready to capture some of these large companies looking for space for sure. Yeah, absolutely.
Okay, super. One last thing I want to talk to you about, Greg, is investment sales in the market. In the second quarter, we had a record level of investment across Canada. Yet when I looked at the Calgary numbers, it was down comparatively from the last years or a few years. $619 million in investments. What's happening in that market, and why?
Well, when we talk about the investment market, we're talking about all categories. That's office buildings, retail centers, apartment buildings, things like that. So it's been up across Canada just because of low interest rates. The economic fundamentals to invest in real estate have never been better.
Yeah.
So you're seeing and every level of the capital stack looking to invest in real estate. In the last 12 months, Alberta, specifically Calgary and Edmonton, have been kind of off the radar because of quite frankly, people trying to see what's going to happen with our energy sector. And that has changed for sure. But I think we are starting to see that to come back, because there's two adages in commercial real estate that always persist as far as success. One is location, 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 right? And then the other one is buy low, sell high. So our prices have come off, and we're starting to see a lot of private investors come back to the market and invest in commercial real estate in Calgary.
Well, you know what? It's interesting you say that, because I just did a story the other day with Summit Rate that had bought the logistics center in Calgary, two newish buildings, right? And one of the things they did say was because of the pricing and the comparative to what you would pay in Toronto or Vancouver, right? So Calgary's got to be a fairly attractive market from a pricing perspective right now.
Yeah, well, absolutely. We haven't seen anyone or any entity say, never again Alberta, never again Calgary. It's just that, there's a lot of people are on the sidelines taking a wait and see approach, or they're diving right in saying, no, it's time to buy. So yeah, that's good news.
All right, super. Thanks, Greg, for joining us again today.
Okay, Mario, nice talking to you.
All right, that was Greg Kwong, who is Executive Vice President and Regional Managing Director for CBRE in Calgary. This has been Business Insider with Mario Toneguzzi on YYC Business, brought to you by MegaPixx Media. Thanks for joining us.